Thursday the 14th of April 2022. Watching Joe Trades Forex Diary. It's my Forex journal, a way I can help myself hopefully improve after struggling for 6 years. I'm a smart money trader, so supply and demand, breaks of structure, order blocks, all those sort of concepts is what I look at. So I do the same thing every day, in and out, over time, doing the same thing. It should give me the results I'm looking for, and these videos will help reflect that. If this is the first time you're watching me, I'm not perfect. I'm not trying to say I'm some sort of Forex guru. I make mistakes all the time. I take losses all the time, but I do take some good winners. And in the last 6 months, I've been getting a bit better at doing that. So this is to help consistency. I only trade USD yen. I only use 3-pip stop. I've just found that looking at the charts after 9 o'clock on this particular pair is when I tend to find the better setups for me, and the stop, everything else is just what I've found works with this particular pair. And again, what these videos will show is that you can focus on one pair, you find one that you like, and you can make good trades and good returns just by doing that. You don't need to be looking at 15, 16 pairs all the time. This makes it nice and simple, doing the same thing over and over, gets ingrained in your mind, should make life easier. So with that said, I will go over the trade I took yesterday, which was a loss, and the trade that I didn't take, which would have been a winner, and I'll go over the trade that I've taken today. What I've also done today is set up a 25,000 demo account purely for the purposes of trying out these concepts with a very low risk, just to show to myself that by using, I think it's a 0.1% risk, you can still do these challenges. It won't take too long. However, you don't need to be using a quarter, a half, 1% risk blowing up accounts. I've done that many times, but this is just a way that I can, one, do a trial run. All these concepts are repeatable, so it doesn't matter if I pass it once, twice, 3 times. This is for consistency over a longer period, which means I can keep doing the same thing over and over. I'll try and keep the waffle to a minimum. So that said, let's have a little look at what I was looking at yesterday. Price has been very bullish overall. However, we pulled into this monthly area of interest. So that has got me thinking, will this be an area price might turn bearish from? On the weekly, again, we can refine that down to the top of these wicks. And then on the daily, again, top of the wicks is essentially where price is sort of pushed up into. So although we're very bullish, we're now in an area where price may potentially reverse and turn around. Now, the other thing to note was a couple of days ago, we did have a body close above this high, meaning that price is still bullish. However, when we have a break of structure, we may see a pullback to grab liquidity to then continue higher. As it stands, price, certainly on the daily, would need to break this low if we're looking at the daily for the change in bias. On the 4 hour, the last down close candle that I was looking at was down here, was this candle. So I was sort of looking for the extremes of price, because also if price comes down here, it may break structure. However, we have got this down close candle here, which has cemented this high, which has then been broken, so we cemented this low. So potentially, if price can break this low, that's the most recent low, we could be looking at bearish price action from there. So looking at the 15-minute just to see what's been happening. So as I mentioned, when I come into the market, I tend to wait until around 9 o'clock. So I got the chart set about 8:15. As you can see, the previous day, the trade I missed, which obviously broke the lowest target in, took out some liquidity, and now we have had a very bullish move up, taken out liquidity that would be sat above these equal highs here. And again, if you're into smart money concepts or learning, you'll understand liquidity, running stops, double bottoms, etc., etc. It's where people's stops are. Price goes through it, it takes it out. Now, the thing that caught my attention, obviously, we're in this monthly, weekly, daily demand zone. Obviously, it has spiked through that. So any liquidity that would have been sat there that's been taken. But what we have got on the chart is this massive candle, which is great, but we've got a big imbalance that needs to be filled. So when you've got these moves like this, there is, not all the time, but again, another thing that's making me think price might want to fill this is the imbalance that we've got here. Now, the area I was looking to target initially was just to see how price reacted from this area of interest. You've got this whole candle and the wicks. It's not to say price will bounce from here, but I want to see how price reacts when it gets to here. So any potential bearish trades I want to be getting out before this zone. So build up a picture. On the 1 minute then, we're waiting to see what price is doing. So we'll just play this forward. What's going on? What's going on? So, as you can see, we've had a change of character on the 1 minute. So you can see price has broken above this high here. Just do that as a change of character. And then the last down close candle, which is here, after that move up, that's also now been broken. Or spiked through, I should say. So we've got all this action. So we've taken out liquidity on sort of both sides, people going long, people going short. However, this would add to my bias of price potentially going shorter. Now, when it comes to where price is, what it's doing, I want to see ideally price come up into a 15-minute point of interest before dropping. So we've got this big wick here on the 15. Again, I tend to find with UJ, when we've got these longer wicks, that's an ideal area for price to come back up into. It's the extremes where price could potentially start to do this fractal break. Now, the reason I didn't take this trade is because the setup, this candle here, is the one I was looking at. Had a nice move. That's the last solid big up candle move before this down move that broke structure. Now, that's happened before that 15-minute area of interest has essentially been made. Now, this is a counter trend, still something I'm working on if these areas of interest are working. However, for the trade, it would meet the rules other than it's not gone into a 15-minute point of interest. So on the 15, as I mentioned, I want price to come back up into this first to then create that pattern before moving shorter. Now, this would have been a case of it meets certain criteria but doesn't actually doesn't meet that one. Now, being counter trend, I might need to change my rules or look at it, how often it happens. So I didn't do anything with this. If I had, however, so I'd look at 50% of that last up move, look for a round number. So we've got 126.20, 202. So I'd look at 120 flat, 3 pip stop, and then on the 15, I'd be looking to target before this zone. So I think I was looking at sort of just above this high here, just to be on the safe. I think it was 6.9 actually. From memory, 6.9. Was that on the 5-minute chart? Let's have a quick look. Yeah, it's got all these up counts. So again, it was, if we get it to 6.9, that gives us 16 to 1, right? Okay. There's that. So anyway, back to the 1 minute. So this is what we were looking at. It went up for tagging in. There we go. So didn't tag the trade in, he says, up until around here. So that would have been, so again, 9 o'clock I'm looking, been eyeing up this, tagged in at 10:30. And again, the thing that caught my eye is you've got liquidity above here. We've got liquidity above these. You know, there's just lots of sideways movement and a lot of liquidity being built up. So people trying to short, etc., etc. Anyway, price eventually comes up, tags in. Now, I went to the 15-minute. Now, I'm not in this trade, so I'm not looking at it. But what I am looking at is all of this liquidity down here. So the trade I took, I was thinking, well, actually, price is moving sideways. Yes, there's imbalance, but because we're bullish, I might actually need to be looking at a bullish trade. So I'm looking at this sort of point of interest here. So I'll just jump back down to the 1 minute to let price play out. So as we're moving down, price pulls back up. And what I was looking at then was, oh, well, we've had a break below, break above, last up candle, last down candle before the up move. I'll get in long here, and then I'll target the high. So I'll just put in the long position that I took off of this, just for the sake of the video, and that would have been, again, I went at 05, 26.05 would have been the long that I was in. So I'm not in the short, didn't take that. I took the long, I think it was about 10 to 1 to the top. So as price comes down, tags me in. I'm thinking, okay, great, nice reaction there. So it's tagged me in here, and we'll see what happens. Get stopped out. So I'm stopped out on that trade. So down 1R, and then price, as you see, to fill the imbalance, price does that. Look at that, bang, spike through. So there was potentially a 17 to 1 trade. Didn't take that, so it is what it is. So that's where we are there. Moving on to today. As I said, set up a demo account just for, well, I'll just track the trades, and then I can sort of, what day are we on now? 14th, 1, 2, 3, 4. And I can track what's going on, So what we've had here then, so coming into this morning, I'm looking at price, what's going on. So again, I know we've now had this pullback on the overall picture. So again, price has gone into that daily supply zone, but because we're still overall bearish, and on the 4 hour, for me to really be looking at bearish moves, I want price to be coming below this low here, last strong down close. But what's happened? So price has broken below this low here, okay, and then price has broken above this high here, giving us a bullish change of character. So we've broken structure, broken the daily high, had a pullback. So now I'm back into looking for bullish moves. Where will price go? What will it do? Etc. etc. So coming into this morning, what we've had, and I was looking at the 1 minute. So we've come down. So initially, I was looking at where price had come into. So we've got all these wicks over here. So we've got this last wick really is the area of interest that I was looking at initially, and we can see that in the morning price spiked down. So what we also have had here on the 15 is price moved down, boom, and then we've closed above this high here, giving again a fractal change of character, bullish change of character. So we've got that on the 15. So again, building the bullish picture up. On the 1 minute chart, this is what I was looking at. So when you drop down to the 1 minute, this is a very good example of almost a textbook trade. You've got a very strong move down into that point of interest, and then a strong move up, slight hesitation, then a pullback, and we've broken on the 1 minute. We've got this 1 minute break of structure here. So we can see now, break of structure there. We've got the 15-minute break of structure over here. Everything's pointing to bullish action. So again, a nice candle that's formed here. So the last down candle before an up move. So that is the one that I'm going to be targeting. So 50% of that candle, we're looking at 125.94. So I'm going to go 125.20 for the entry. So just get the long position. 120. Now on this trade, when I look at the 15-minute, what I was looking to target is where is a strong area where there'll be some liquidity. Now, obviously, price has been moving, as you can see, the line there is moving up, but the area I wanted to target was this initial drop here. So this would be called a weak high. So I think I went, 6.9. 6.9 was the target. So again, you've got all this liquidity that's sort of sat here for people that are getting short. Just get that to 6.9, and it's a weak high because it was unable to break the previous high. So this should give me a fairly low resistance area for price to target. So again, looking at price, what we've got in the stops, we've got 3 pip stop, so it's a 16-to-1 trade. So we will wait for price to come down. And again, this is just the order it's set. So there we go, so price tagged in, and again with the low spread on UJ, it did get filled. And I'll show you this screenshot of my demo account. So from here, we've been touched now. Again, as I said, I use a 3 pip stop, but when you get these trades right, doing the same thing over and over and over, you can see that you get tagged in and then price just takes off. So there you go, we were hit target, and that's pretty much a pain-free sort of trade. There you go, it's obviously gone a lot higher, but you know, from the point of entry that was at 12:30 to 2:30, so within 2 hours you've then hit a 16-to-1, and that's what we've got there. So I'll put a screenshot up now I'll put that up at the end. So the screenshot will show the demo account. It's open today, first trade. Thankfully it's hit target, and that's with a 0.1% risk. So on a 25,000 account, you're looking at sort of £250 per trade, and we'll see how it goes. We'll see how long it takes for the account to grow by £2,500, which is what you'd need to qualify for a 10% gain on a challenge sort of account. And hopefully, I mean, I'm looking at the screenshot now, it's $409.34, so there you go, $400 in one trade. So you get 10 of those, 10 trades, that's $4,000. You've easily done that. So it might be 5 trades, 6 trades, give or take. But again, that's just looking at the breaker structure on the 15, breaker structure on the 1 minute, the last down candle because we're looking for a bearish move going up, and that's also looking at the bullish move. You know, I was looking for a bearish move yesterday because we haven't broken below that 4-hour low, and you know, that's where we are. So just to remove this, and as you can see, for current price, you know, it's been moving up a lot higher. So that's what we got for today. If you enjoyed it, fantastic. Please like, subscribe, share, all that sort of stuff that everyone bangs on about. Again, it's just for my own personal benefit, but if you enjoy it, if you're learning something, great. All of this, there's just so much free content on YouTube where you can find this, and it's just because over the last 6 months I've been watching certain videos by Albert Burgess and Magic FX, which shows how to map, how to basically tie together all the information that I understood already about smart money and putting it in a format that has helped me develop my own plan to approach the market every day in a certain way that has been providing these trades that are playing out. So up until about 6 months ago, I had problems getting 1 to 2, 3 to 1 trades. Now I'm getting anywhere from 10 to 1 to 25 to 1. So tomorrow will be a non-trading day because it's bank holiday. I'm going fishing. Hopefully not just sitting by a lake, but actually fishing. So Monday we'll come back. It's bank holiday, so the action might be a bit weird, but we'll have a look. And until then, thanks very much for watching. Catch you again soon.